Take out of the market's performance today?
James, it certainly was a very flat performance today, and really we couldn't turn it around, even though we did see that pretty positive ANZ job advertisements coming through, which were in fact up around 4.3%. I think investors are sitting tight for now ahead of a lot of this economic data out this week, in particular that employment and unemployment data coming through on Thursday. But it certainly was very flat, as Michael mentioned, very light volumes going through. And of course we did see the US closed on Friday overnight, so didn't have many leads, but certainly was pretty flat ahead of the week.
Expecting ahead of some of those key releases?
I think investors are probably a bit cautious ahead of some of these key releases, but if we do get some pretty positive reads coming through, then I do suspect we could continue to see our market rising. Of course, last week we did see a very strong performance in our market, up around 1.5%, but that was off the back of a lot of strong leads from the US, a lot of confidence and positive economic data coming out from there, as well as China. So I certainly think looking at the week ahead, it is going to be focused on a lot of this local economic data out of Australia, and potentially if we do get some positivity, we could continue to see our market rising. As Michael mentioned, we also have that China data coming out. We also have their inflation data on Wednesday. But in terms of the US, their corporate earnings are starting to begin this week as well, with Alcoa kicking off after market tomorrow. And there are some analysts who are expecting that corporate earnings will rise by about 6% over the year. However, given that we are seeing the US trading at very high levels at the moment, we could see a lot of heightened sensitivity to any earnings surprises or disappointments at this stage. So certainly we'll be keeping an eye out on the US as well as China, but I certainly think the focus in terms of any catalyst for our market will be around that local economic news.
As well as the shares in the end closing up about 1.9%.
It was interesting, James. A lot of the time when we do see a bit of change in management and new CEOs coming in, we do certainly see a little bit of volatility, certainly in the short term anyway. So it was interesting that we did see the stock closing up, although could potentially still see a bit of volatility coming in the week ahead or so. But as Michael mentioned, we have seen the company coming under pressure. They recently announced that earnings downgrade, and really in a lot of that workwear segment, which really has been the one coming under pressure, and we were of the expectation that management would probably be facing quite a number of headaches given that division. So there certainly is a few problems within the company. We know they've recently undertaken this strategic review, some cost-cutting initiatives and performance improvements as well. So obviously there wasn't an agreement on the table in terms of at the board there. So it certainly was an interesting performance today. We'll have to see how it goes over the next couple of days.
Let's talk some of the M&A out there at the moment that we saw today, likes of Aristocrat, Wotif as well, an interesting one, Leanne. Today their shares closing up 24.6%.
They did, James, and they were just below that takeover price of $3.30 that has come in. I do think it looks pretty appealing for investors, though. We do know that this company has been an underperformer and been coming under quite a bit of pressure over the last 12 months or so. Of course, their interim net profits were down around 18%, and today they indicated that they expect their full-year net profits to be down around 16%. So we know that they've been coming under pressure as well as a result of that high Australian dollar, which is resulting in people sort of holidaying overseas. Of course, they are facing intense competition from the likes of Bookings.com, Expedia themselves, and of course the hotels themselves. And they've also really continued to report declines in their hotel room volumes. They really have been unable to capitalise on that trend in domestic travel since the GFC. So they've been facing years of underinvestment in their technology and their branding as well. So we know that they've been coming under pressure. So potentially does look like a pretty good offer price that has come through. It was at a 31% premium to the last 5 days average or so. However, looking at if you were, say, a long-term holder of this stock, back in January 2013, the stock was trading at about $6. So it's down around 38% since then. And if you go back even further to around 2010, it was up to about $7.60. So it's down around 58% since then. So I guess getting a price of about $3.30 for those long-term holders may be disappointed, but certainly given a lot of the challenges, it does look pretty positive for investors.
Michael